Hey, g'day there. Today's tax tip is all about doing a motor vehicle logbook. There used to be 4 ways to claim vehicles, but now there's only 2 ways to claim vehicles as a business. And the first one is the cents per kilometre method, which is pretty well known, where the ATO gives you a specified amount each year, and based on how many kilometres you do for work purposes, you can actually claim the kilometre number times the cents per kilometre, which equals your deduction. That's capped at 5,000 kilometres, which is just over $3,500 in deduction. So I guess that's option 1. And if we have a look at option 2, which is claiming the actual expenses of running that vehicle and maintaining and purchasing that vehicle, and you times that by your business use, then that can give you how much tax deduction you can have. So I guess there can be a massive difference between those 2 methods to your outcome from a tax perspective. So just remember that first method is just over $3,500 in tax deduction. Now let's use an example where you've purchased a $50,000 car you use for 80% business use. And it takes maybe $10,000 a year in fuel, servicing, rego, insurance, interest on the loan, that sort of thing. So 10 grand. So just the running costs of that vehicle times by the business use of 80% equals $8,000 in tax deductions. The other benefit of that is you can actually claim the GST up to the business use percentage as well, which is, money straight off your BAS bill, which is pretty cool. And you can't do that with the cents per kilometre method. So you've got an $8,000 deduction under the logbook method versus a $3,500 maximum under the cents per kilometre. Now the kicker here is also depreciation. So depreciation will make those numbers even more further apart as well. So let's say you bought that $50,000 car. If you purchase that in the COVID concessional period where you can write off the whole cost of an asset up to its business use, then that $50,000 car times by 80% is $40,000 in depreciation. That's a huge number when you compare it to a maximum of $3,500 in claiming under the cents per kilometre. So that 40K plus your $8,000 in deductible running costs is 48 grand versus your 3.5 when you add that all together. Plus you can also claim the GST on the purchase cost of the car up to 80%, of course, if you use the logbook percentage. So I've very rarely seen an instance where the logbook method of claiming a vehicle does not outweigh the benefits of using cents per kilometre. So I'd encourage you, if you don't already, keep a logbook. It has to go for 12 weeks and it has to start in the financial year that you want to start using that percentage in. So you've got until technically 30th of June to start that logbook. Keep it for 12 weeks, working out what kilometres you drive for business versus personal, work out what percentage overall that is, keep that on file as well, and if nothing substantial changes in the pattern of driving, you can keep that logbook for up to 5 years and refer back to it before you have to keep another one. So pretty cool. Alrighty, so that is the tax tip on keeping a motor vehicle logbook.